So I wanted to make sure that we were strengthening our saws and making sure that we are actually building big businesses so that we can get you on that right side of the quadrant. Remember that Chad has been talking about? And so I brought in today, y'all see it's a little peculiar, right? But y'all should be used to this when it comes to my team meetings. Christian Onyemem, right? He is a CPA tax strategist and planner as well. And so I'll let him continue to introduce himself just so he can get the party rolling. But take great notes, make connections, make sure you go outside into our vendor row as well, because all those people that are out there are part of your financial planning team. Okay, so we can build big businesses so we can weather whatever storm gets thrown to us. So without further ado, I'm gonna give it out to you.
Okay, testing. Okay, we're good. So guys, yeah, I own a CPA firm here in Houston, Texas. I'm gonna give you a quick bio because it's a long one. Long story short, I grew up in a family business. My dad owns a mental health clinic, an ambulance, and he owns like an overnight adult daycare center. Age of 14, 15, he threw me into the business, said, hey, Christian, learn how to do the bookkeeping. Didn't know what I was doing. Fast forward, I go to college for it, become a CPA, work at a big accounting firm called PwC. And then, yeah, well, yeah, that's good news. But yeah, I work at PwC, and then I kind of just looked up and said, let me just grow my own firm, do the same thing I did for my family business for other businesses. So I'm year 6, and I'm here now. Business is growing. Our average client does anywhere between 1.1 million all the way to our largest client, which is in the oil and gas. They do around 22 million. Right. So I say that to say we understand the complex situations. And I have a quick presentation. So how this is going to go is I'm going to demonstrate something I have an issue with my realtors about because I see this happen each year during tax season. Y'all come into my office and I usually say, yeah, you're owning around 30,000 this year. And they look at me confused. I'm going to break down what we need to do to avoid that owing 30,000 or 20,000 or whatever it may be. So once we do that, we should understand how money moves within our industry. And then we're going to, I guess I'm, supposed to give you a tax strategy. So I'm going to go through a list of tax strategies that we can use this year to basically reduce your tax liability. And then I kind of like a round table talk. So any questions y'all have, y'all just lay it on me. Is that fine?
Great.
There we go.
You can do that. Yeah. And I'll take this.
Let me get mic'd up.
I hate getting rid of my mic, but this will be all right.
Okay, testing. That's still good? No, okay.
Brute. Is it saying this must be my month?
Okay. So, I forgot we had online too as well. So guys, let me show you the issue I usually get every tax season, right? So usually realtors, y'all guys got like a profit margin around 80 or 70%. That means for each dollar you make, you bring home around 70 or 80, around 70 or 80 cents, right? That means y'all don't have any expenses. That's good for business, but when it comes time to pay Uncle Sam, you're taxed on your profits. So let's break this down, right? And this is just a quick intro. So usually my realtors, they make their money, right? They basically make their money, and then they just go pay their personal expenses. I'm just put people personal, and then they forget about Uncle Sam, the IRS, right? So they usually, and I work with basically realtors that's the first year or their 20th year, right? And it's usually the same situation, right? So they forget, like, hey, you're running a business. You have to operate as such. So I look at their profit, and it's around, let's just use 80,000 to be simple. Can someone pull out their phone and do 80,000 times 25%? We're just gonna keep it simple. What 33 is it? 20,000. So yeah, then that's their tax. Usually that's their tax bracket. So then I tell them, hey, you're owing 20,000. They have no money to pay for that. Now they're like kind of scrambling next year to reduce that 20,000 tax bill. Right? So the demonstration I want to show today is how the money's supposed to move. So I need 4 volunteers. And I have money for you too. I just need 4. 1, 2, 3, 4. I have money. I have money for you guys. So we're going to just break through. I keep forgetting we have online too as well. The first thing we're going to do, right? And if y'all can just line up right here. what I'm explaining is the natural roles within business, right? There's different roles and different situations within business. In the world of, being a realtor, we have a buyer, right? So I need one buyer. Who's going to be the buyer? So the buyer, they have the money, right, to pay the house. So you're going to hold the money. Huh? Yeah, real money. And y'all guys can keep that. It's just, so we have our buyer right here, right?
Okay.
So that's where's the marker at? Right. All right. So the first one's the buyer.
Y'all are doing exactly.
No, it's only 20. So the second part, right? We have our realtor. Who's going to be our realtor? Right. Now the realtor, they're a business, right? They're not just, a 1099 contractor or whatnot. You're a business owner. You need an accountant. Can you be the accountant? Okay. So can you pull your phone out? Just have your calculator ready. And these are natural roles within business, right? There's usually a customer or client that, we want to make a sale to. We're in the business of being a realtor, selling homes. And we need an accountant to make sure our business is running smoothly, right? And that last one is just the cost of doing business. I need you to be the IRS. So these are just, and there's more positions. Maybe you got a lawyer on your team. There's different, but these are like the natural positions, right? So the realtor job is to make money. And how we're going to make money depends on how many golf balls you can hit into the hole. Now, here's the thing. You're going to get 3 chances. Basically each ball that you hit is $5. You may make 0. That means I got to pull in another realtor. You may make 15, right? So we get paid based on our performance. Y'all guys listed amount of people doing great numbers there. We get paid off our performance. So let's perform. Let's perform. So, and usually, actually we're going to start like this because this is how business works in a way. That first sale is usually the hardest because, sometimes we're new. We don't know what we're doing. Sometimes we got to get the hang of it. So let's see if she can make the hardest shot. If not, we're going to have to switch you out with another realtor. There we go. Second shot.
That's just how we
So
roll.
can you count out
You
5
know
for me
I
right
mean?
now? Can you count out 5? Okay. You can hold that right there. So hold on, let me hold it for you.
Thank you.
Okay. Second shot. Okay. We're still gonna play one more. Can we count on another 5?
Which on your team?
Right. Top selling realtor right here. Made 10,000, 10 million, right? So, but that $10 not all yours though, right? We have business expenses. I'll take one. Usually your software cost, gas, mileage, normal business expenses to operate as being a realtor, right? So she has paid me her operating expenses. Now, can you do, yeah, she made 10, well, you made what? That's $9 right there? Because that's all your profit. We get taxed on our profit. Remember, this is not her profit. That's just her gross revenue. She made 10, but she had to pay some of her business expenses. So now she has 9. We get taxed off the 9. That's the profits, right? That's taxable profits. But we're not done. We still got the IRS to pay, and we still have to pay our accountant too as well. I didn't factor that into the operating expense. And we still got to pay taxes, right? So let's calculate your accountant. I'm not sure how much the accountant charges. How much you want to take from her? Yeah, she's just taking $1. So now she's taxed off $8, right? So what's 8 times 25 or 30? It doesn't matter. $2. You got to pay the IRS. So you mind if I hold that? She started off with 10, but can you count this out for me? How much is that? Because the money that you make from your commission sale isn't all yours, right? Natural flow of money. This is how business works. So she got $6. Her sale, she made a sale for 10. Thank God you didn't run off and just go spend that 10 because you forgot to pay your accountant and you forgot to pay your IRS. So this is the natural flow of money, guys. Well, not money, of business in a way. You get money coming in, you have to pay things. Each spot needs a bucket. You gotta be active with the IRS to stay in business. So the moral of this presentation is to kind of say in simple terms, the money you make ain't all yours, right? She keeps 6 and she has to live off the 6. Yeah, pay yourself. That's-
Forgot to
yeah.
pay the broker first.
I forget. Yeah. So, right. So,
Yeah, that right there.
so guys, that's just the natural flow of kind of things work. And yeah, that's like a simple way we did it. There, we can go into detail, but more of the story, the money that you make isn't all yours. And a lot of realtors don't understand that. And then they come to my office and I have to tell them, hey, you owe around 20 or 30. And then they're not, they're not happy with that. And then they try to fudge the numbers and say, ooh, you can't do that over here. So, that's my presentation. Any questions? Because I don't have no PowerPoint. I go off questions. No? Okay. So I was supposed to give a couple of tax strategies. Oh, no,
Yes.
all that money is yours, guys.
Oh.
Yes. That's,
Give my. Oh.
so, so, so,
If you just giving money away.
You only gave me 5 again, you're missing
Oh
another
my God,
5.
nobody else have a council. Okay, all right.
so guys, you know how she walked away with $6?
Let's refocus. All right, now here's the real work, right? After you understand that.
So the next part, guys, I'm talking about some end of the year tax strategies. It may sound corny, guys, but it helps. She walked away with $6, right? It could have been more in her pocket if she did end of the year tax strategies. That's the whole reason you should be reaching out to your accountant to kind of have them work with you. Now, tax planning is different from tax preparation. Tax preparation is just data entry, kind of like prepping your tax return. It's needed, but it's not strategic thinking to probably make you keep $8 instead of $6, right? So you want to go to your accountant and do tax planning so you can keep $8 instead of $6, because I'd rather have $8 than $6. Y'all guys feel me on that one? Right? So here are some things we can do. Can I erase this? It's simple things, right? My whole thing when clients come to me for tax planning is I don't actually want to spend money. I don't want to spend money if I don't have to. I want to find ways to keep the money within the individual self or the business. Those are the first two buckets I try to fill up. So one of the things I do is the Augusta rule. Anyone heard of that? The Augusta rule? No? Yeah, Augusta rule. So Augusta rule is a picture. I'm at home, right? Just kicking up my feet. I own a business, right? I have a meeting room I have a meeting in my living room. I get to treat that meeting room as like a hotel conference room. And my business pays Christian, myself, for that meeting room space. As long as it's under 14 days, that's considered tax-free. This tax law originated in Augusta, Georgia. I'm not sure how they did it, but it's in the tax book. Like it's a fair tax strategy. So basically, we're not really, spending money. We're simply moving money over from our business account over to our personal checking, right? As long as it's under 14 days for that set amount of what you decide it can be, you get to basically just move that money over and not consider it income for you, right? But it's a business expense on your business. Therefore, you don't have to pay that much in taxes because you were taxed off our profits. You guys feel me on that one? No? Yeah. So,
It originated, I believe, from the Masters golf tournament.
I figured that.
Yeah, that's right. W. Ross, you may want to ask him after. He'll probably have a little more info.
right. And that's all we're doing, guys, because we need meetings, just like this location right here. This is meeting room space in a way. Our business is paying our personal self for a space in our living room, and the business is paying yourself for it. But as long as it's under 14 days, we don't have to report it. Right. So there's things, it's simple right here, but there's a laundry list of things we need to do to be in compliance that I can't go over, basically on this call because it takes too much. But long story short, we need a rental agreement with ourselves. We need to go find comparable rates to see how much we can pay ourselves for each meeting, for each meeting space. So there's things we need to do, but look into the Augusta rule. If you, just come to our firm or come to a different firm, tell your CPA, did you hear about the, Augusta rule? Can you help me on this? If not, come to us because we got you. But that's a cool tax strategy, that we can take advantage of right now, right? Any questions about that? Mm-hmm.
No, Dr. Augusta. So like I do my pie giveaway at my house,
Mm-hmm, mm-hmm.
okay? But if I did a 14-day thing, is that what you're talking about? Like, okay,
And you can backdate the dates too as well. You just bet. Here's the thing, you can't do this rule if you don't have bookkeeping. You need some type of bookkeeping because if I have to defend this on the IRS, I need to see where that money flowed for that set amount. But I know probably realtors pay themselves out of their, like, basically already paid yourself. But my fault, I'm thinking here too as well. But if we backdate it for say you have a habit of taking $800 out each month, right? We can use that as a meeting room expense. I just got to re-record that if that's what you've been taking out. 14 days. But the bookkeeping has to be fair in order for me to make that judgment. If it's not, I don't want to do it. Yes, ma'am.
Offer bookkeeping also. Or do you
Yep. Yeah, monthly accounting. Yeah, we do. And here's the thing with us too as well, because we kind of have two-way approach. Sometimes it makes sense for our firm to take you on as a client, right? But sometimes it makes sense for me to just build out the system for you and go find a virtual assistant that can do it. Because realtor, your books aren't really that complex. It's the same thing each month. So how can I put this? I want to make sure I'm always saving money, even as that's spending less with us. That's just, just how I roll. Yeah. It just depends on the revenue of the client, to be honest. If it's complex, I'm gonna take you on as a client. But our lowest price point start off at $500 a month. For example, we have an oil and gas company. They got different things going on where it makes sense to go get a American CPA that knows your business. Oh, for real estate? For real estate? Depends. If you're a realtor, yes, but if you have multiple real estate properties that we have to account for, then I'm like, okay, come on, we're gonna take you on as a client. I just have to justify why I'm charging you so much, basically. I want to be fair. Yeah, yes, sir.
Could we go through the presentation before you start your Q&A?
Oh, well, yeah. Oh, shoot. Oh, that was the presentation. Yeah, that was. It was basically just showing the movement of money. I don't have a PowerPoint. I don't like doing PowerPoints. Yeah. Yep. No, not really, because they don't know advanced tax strategies. And here, how can I put this? H&R Block's TurboTax, they're not trained. They didn't put in the hours to really do your tax return. And I've seen horror stories of realtors paying too much because they didn't know a simple thing as taking advantage of your home office, right? They don't know that, and they're trying to treat you like a number and move you out the way. We don't treat you like a number here at my firm. Yeah, no problem.
Real estate agents who have employees or they have multiple investment properties, what are some things they can do either by structuring their business or other things outside of the Augusta?
Outside, so yeah, the structure, that's funny. Y'all, the structure of most businesses are usually wrong. So if you're making anywhere in profits of 50,000 or more, you need to be like an S corp. Because imagine going to HEB and you're looking at eggs and it's 15.3 more than what you thought it was going to be. That's what it's like being a Schedule C making over like 50 or 60,000, right? So you're overpaying in taxes if you're a Schedule C and you're making around 50, 60,000 plus in profits. So that's revenue minus expenses. So check the foundation, or excuse me, check the structure of your, check the structure of your entity with your CPA because it may be wrong. You may still be a Schedule C and you're supposed to be an S corp. Yep, we do. We do. And I think we had a question over here too. Yeah. It's a tax year, that fiscal year. Yeah, that fiscal year. Yeah.
Some common deductions that agents don't typically add onto their tax returns.
Yeah, it's home office. That's the number one. So we factor in your home office. It's taking advantage of your business vehicle using bonus depreciation, Section 179. Those are basically basic tax strategy we can use like on that tax return, ASAP. And I never see it on the tax return really because H&R Block, they're not looking for that. They're trying to get in, get out. Anything else? No?
Say you're going for a personal visit and then you have a Zoom meeting with your client and like there's a walkthrough and you're helping with the client.
Oh. You say one more time for me?
So if you're going for a personal visit and you have a walkthrough.
Oh, shoot, yeah. I can hear you. We don't need the mic. I can hear you.
It's for people online.
Yeah.
I'll repeat it. I don't know why you're.
Phone going on.
Yes.
So like if you're going for a personal visit and then you have, like you're in a hotel room and then you're taking a Zoom meeting with a client and having a, walkthrough or something like that. Can you use that Zoom meeting plus the cab you're using, all that?
Mhm.
For
Yeah.
the tax return?
Yeah, all that is considered business expenses. So basically she was saying, can you use the Zoom meeting software and then like I guess the travel costs associated with going. Yeah, so she was talking about business expenses. So basically we want to factor in our business expenses and take that because it helps reduce the tax liability. But what's a business expense? It's anything that's ordinary and necessary for you to produce your it's anything ordinary and necessary for you to produce your money, basically. Right. So let's check this story out. I was actually I was golfing. I was trying to practice golf. So I hired an instructor. But golf and CPA, that's not like, I can't write that off my books, but this is what I did to kind of twist it up a little bit. I recorded content from my guy, Mark, where Mark at? But I did basically marketing, right? Because I recorded content of me practicing my swing. I used that marketing to basically go market out to golf instructors. I do bookkeeping. Golf instructors need bookkeeping because they're a business too as well. So that's why I was able to write off my golf lessons because I made it ordinary and necessary within my business. So a business expense is just anything ordinary and necessary. The most common ones are software fees, travel, gas, mileage, stuff like that. All right. Any other questions? We good? Yeah.
Like you can do that with social media as well.
Yep. So food, so a lot of my clients are married, right? So they go out to dinner with their spouse. Usually they're always talking business. We're counting that in as a business expense too. Yep. But here's the thing. A lot of people can't take advantage of the business expenses if you don't have bookkeeping. I know bookkeeping is annoying and boring, but it's needed in order to do the cool and sexy tax plans, right? And it's needed if I'm defending you against an IRS case, right? So if I don't have anything to go off of, you kind of wasting money with me because I'm probably going to lose that case with the IRS if you're in trouble or if you owe back taxes. I need the bookkeeping and the monthly accounting to do my job.
And
Bookkeeping software.
Yeah. QuickBooks is the #1 bookkeeping software. There's others out there, but QuickBooks they're the #1 for the reason for small business owners. They're going to get the job done. Yeah.
you can also hire your other family members like kids, you guys.
Okay,
Yeah.
I missed that part. I just came in.
Mhm.
You said you could claim your golf membership.
Oh, well, hold on. There's a way you got to do it. So you can claim your golf. No, there's a way you got to structure it, really. If you're like, so I should never probably use that because it's your documentation has to be A1 in order to start claiming things of that nature. The reason I was able to claim my golf expense, and it wasn't all my golfing, it wasn't all my golfing, I'm losing my words. It wasn't all my golfing lessons. It was only some of them. But I did that because I was marketing out to golf, I was marketing out to golf instructors to get them as a client. So I flipped the script. Yep. I made it a marketing expense because that's what it was. I have the film to prove it.
Okay.
Right.
Last question.
Mhm.
If you find yourself that you do have a heavy tax bill that's available right now, what can you do to kind of, if you know you have higher expenses and you anticipate having those higher expenses,
Mhm.
how can you use those expenses for the next year
Mhm.
now?
Say it one more time because I heard 2 questions.
So I know I have a high tax bill and I'm trying to reduce it.
Okay.
Right? And I also know I pay $5,000 for a specific software every year
Mhm.
or a computer program or lead gen.
Mhm.
And it's a subscription service.
Mhm.
How can I use that right now this year, even though it's for next year?
But you already paid this year though, huh? Sure. Yeah, so that's going to be on 2023's tax returns. I'm assuming it's online, right? So you can claim, well, you have to claim that this year because you're probably a cash basis. So any expense that you use from January all the way through December, we're claiming it on this year's tax return, right? So I hope that answers your question.
Because I'm paying it upfront, so I'm paying next
Yeah.
year's debt upfront.
I like that too. That's called accelerating your expenses. I recommend that you do that too as well. I'm sorry, that's what you're trying to get to. That's called accelerating your expenses. And that's something that we do too as well. And as simple as making prepayments this year so you can take advantage of the tax liability to offset your basically to offset your taxes. So that's what we're doing. So if we have rent, if we have any software costs that we can pay in the month of December, do it. If you have the cash on hand to basically do it. Great question. My fault. I was too many things.
Okay. All
I
right.
have-
Well,
I have a question related to bookkeeping. Yeah, so for a solo agent with little to no revenue, if we are doing, we are keeping track of expenses spreadsheet wise and recording them on ongoing basis, will that amount to bookkeeping or
Yeah,
does it
that
have
is-
to be?
No, that is a form of bookkeeping. You can do the QuickBooks way because it's automated and it's faster and it's simpler. But if you have a system, I don't recommend it. But if you're tracking everything in Excel and it works for you at this time period, that's fine. You just need to have something to send to your CPA that shows how much money you made, a list of all your expenses and what's your profit. They'll be happy if you do that.
Okay, and having the receipts to back up those expenses will help
Yes.
as well.
Yes, ma'am, because you want to have your receipts, because if you're under audit, they want to look at your receipts. I was able to wipe off, I think it was like 17,000 because he had proof that the IRS messed up and added an extra zero. He kept all his documents and all his receipts on everything.
Got
Because
it.
the IRS
Okay.
added an extra zero to the end and made him owe money.
Oh, wow. Okay. Okay. Well, thank you.
No problem.
Now, does receipts only have to be receipts or can it be a credit card that is a business card?
Like statement.
Yeah, and that works too as well, to be honest, those statements. IRS truly isn't checking for receipts unless you get in trouble. We say keep your receipts because it's a good habit, it's good business. But audits are rare. They may not happen, but if they do, we want to have our receipts. That's why we tell everybody keep your receipts.
all right. Where can they find you?
You can find me at my office, 6065 Hillcroft, and I'm gonna have my business cards right here. I do social media stuff. But you just come to me right now. I'll be over here.
Okay, cool. Thank you so much.
Please.